2024 seemingly marks the year of Russia's good fortune. Its economy looks defiant in the face of heavy Western sanctions. It is expected to grow 2.6% this year, more than double the previous estimate. Moreover, even as Ukraine scrambles for arms and ammunition, even with supplies guaranteed by almost all of NATO, Russian arms production now seems to be kicking into high gear. All of this may seem like a triumphant resurgence for Russia and an immense political victory for its president, Vladimir Putin. But let's not get ahead of ourselves. Beyond that facade lies a rather grim reality. Despite what Moscow wants to project, a closer inspection reveals that Russia's economy is silently undergoing a deep crisis, one that may well blow out of proportion soon. So, what are factors exactly that point towards an impending catastrophe? Why are news headlines reporting differently? And, most importantly, just how critical the war and Western sanctions were in the making of this dire situation? Let's find out. Can Russian statistics be trusted? The first and most obvious skepticism about Russia's economic health is whether the official figures shared can even be trusted. While Russia published promising data about its so-called resilient economy, be mindful that its statistical reporting is less transparent and more sporadic. Rosstat, Russia's federal state statistics agency, has a long history of manipulating official economic statistics to please Putin. In the words of one analyst, it has a habit of bending over backward to correct bad numbers and burying negative statistics, undermining its statistical integrity. Do note, Putin fired the heads of Rosstat, transferred controls of the agency to political appointees, and appointed a blatant political pick as deputy economic minister. Many of you would say that IMF figures prove the resilience of the Russian economy despite sanctions and war. Well, the IMF is no unbiased body either. It has had a dubious record of misrepresenting economic stats in the past as well. The IMF's forecast of economic growth in 2023 extended even that of the Russian central bank. The current IMF chief, Kristalina Georgieva, has been accused of pressuring economists to boost China's business climate ratings during a previous tenure at the World Bank. If you want a better picture of the Russian economy, ask those who primarily benefit from its growth, the country's oligarchs and business tycoons. Almost all of them paint a grim picture of its economy. Russian aluminum tycoon Oleg Deripaska, for instance, warned in 2023 that Russia may run out of money in 2024 and needs foreign investment from friendly countries to break the threshold of international sanctions. A study by the Vienna Institute for International Economic Studies also found a huge divergence between official unemployment statistics with those published by the Russian government. You would be surprised to know that Moscow refuses to disclose major economic indicators like foreign trade data, monthly output data on oil and gas, capital inflows and outflows, financial statements of major companies, central bank monetary base data, and foreign direct investment data. FYI, these are major statistics that go into assessing an economy-wide GDP forecast for any nation. So the Russian government not sharing is indeed a huge red flag, the type that assures you everything is well until it becomes clear it never was. Depreciation of Russian ruble. Another big indicator of economic viability and resilience is the strength of a nation's currency. One that loses a lot of its value in any given year is one that people do not have a lot of faith in. Since the beginning of 2024, the Russian ruble has lost around 30% of its value with respect to most currencies except the Turkish lira. The unfavorable trends in foreign trade have resulted in the supply of foreign exchange from current account transactions. In addition, Russia's ambitious program to de-dollarize its foreign trade has backfired greatly. For example, by May 2023, Russian exporters had claims worth $10 billion in Indian rupees. They were soon to find out that this was a currency difficult to acquire and convert due to limited liquidity in the Indian rupee market and stringent exchange controls. Now, one might suggest that this downward trajectory of the Russian ruble would actually be a blessing in disguise. It would spur exports, domestic manufacturing and foreign investment because a weaker currency makes business more competitive, both domestically and internationally. Yet, significant rebound remains unlikely due to sanctions and structural weakness of Russia's economic system. Also, the falling ruble does not benefit domestic producers because, other than natural resources, they have relatively little to export. The Russian businessmen are also irked that the finance ministry now wants companies registered offshore and owned 50% and above, or potentially controlled 25% and above, by Russian citizens to pay taxes in Russia. But why Russian businesses would want to expose their offshore earnings to Russian taxes once they've gone through the trouble of transferring their money out of the country remains a big mystery. You must have now guessed it right: the inherent structural weaknesses. Declining workforce, a threat to the Russian economy. And what are these, you might ask? The biggest and most severe one is probably demographics. A strong workforce is the backbone of any economy. A nation can have vast resources, land, and other geographic boons, but will find it impossible to materialize any of it into wealth if there simply aren't enough workers to employ in this regard. Owing to vast military mobilization efforts, Russia lost or injured around 350,000 Russians in the war. Moreover, around 1% of the workforce has emigrated since Russia invaded Ukraine. This comes on top of the fact that Russia is a country with low birth and high mortality, which makes the aspects of economic sustainability all the more bleak. Decline in value of Russia's principal exports. There has been much talk about rising exports to Asia that offset losses induced by Western-placed sanctions. But let's look at the raw numbers to assess if that really is the case. In 2023, Russia's total exports fell by 28.3% to $425.1 billion, with supplies to Europe down 68% to $84.9 billion. This means that Russian political and diplomatic influence in the West is going down further. Meanwhile, exports to Asia rose by 5.6% to $306.6 billion, while the share of this region in Russia's exports climbed to 72% from 49% in 2022. That still remains a $119 billion difference that Russia failed to make up for. Overall, the backbone of the Russian economy, oil and gas reserves, saw a sharp decline in their export in 2023. They fell by 33.6% to $260.1 billion, while exports of metals and metals products declined by 15% to $60 billion. Another hallmark of the Russian economy, its arms exports have recorded a sharp decline in their value. According to data from the Stockholm International Peace Research Institute, SIPRI, Russia's share of global arms exports fell from 22% from 2013 through 17 to 16% from 2018 through 22. Meanwhile, the U.S. saw its arms sales value increase from 33% to 40%. Arms sales to Russia's biggest importer, India, fell by 37%. Even Russia's strong friend and ally, Serbia, planned to purchase Rafale jets from France. A significant hurdle in reversing the downward trend of Russian arms exports is that the providers of critical military technologies are located in the unfriendly countries. Take the example of Ukraine, which provided naval helicopters and naval diesel turbines. Relations with Dnipro, producer of the SS-18 intercontinental ballistic missile, are now severed. Impact of war and sanctions. And now, finally, let's talk a bit about the current war and its impact on the nation's economy. Before invading Ukraine, Russia had robustly built fiscal and financial defenses. At 16% of GDP, sovereign debt was among the smallest of any nation. In contrast to most countries, by the second year of the pandemic, Russia actually had a budget surplus. It had amassed a $175 billion national well-being fund and more than $500 billion in international reserves at its central bank. The largest banks were well capitalized compared with their global competitors. Since the beginning of the war in Ukraine, some 16,587 sanctions have been slapped on Russia by the U.S. and West. The sanctions have hit the backbone of the Russian economy, i.e., natural gas exports and caps on Russian oil prices. Moreover, around $300 billion in Russian assets have been frozen around the world. Thanks to these sanctions, Russian companies and banks are busy seeking bailouts, not new markets. As most of the central bank reserves are frozen by the West, and now Russia is facing an annual budget deficit of about $17 billion. The war in Ukraine is going to haunt the Russian economy for a long time. IMF Managing Director Kristalina Georgieva says, "I actually think that the Russian economy is in for very tough times because of the outflow of people and because of the reduced access to technology that comes with the sanctions." So, although this number looks like a good number, there is a bigger story behind that, and it's not a very good story. The Russian ruble has taken a severe hit by Russia's decision to invade or annex foreign territories. Before 2014, the ruble exchange rate was relatively stable against the US dollar. Western financial sanctions passed in response to the occupation of Crimea and invasion, and the Western sanctions halved the exchange rate to 135 rubles per dollar. Although Russia has a huge account surplus, its effectiveness is nullified by a significant net outflow of capital as Russia invests large amounts of money abroad. In 2022, Russia's current account surplus spiked to a record $236 billion, while $239 billion was pulled out by the country. Center for Economic Policy Research found a sharp contraction of economy activity after the invasion. Signs of recovery? A mirage. So what then to make of all the recent news headlines? Yet, as they say, all that glitters is not gold. Despite the optimistic facade portrayed by these headlines, the reality is far from rosy. In fact, it may well be a mirage that Putin has successfully sold Western media on. To mitigate the impact of Western sanctions, Putin increased military spending from 3.6% in 2021 to 6% in 2024. This spurred the production of defense equipment. An increase in salaries and benefits for soldiers uplifted the financial state of many poor families. Russia also provided $130 billion as subsidized loans to the public, which enabled many to buy apartments and property. As a result, 3.6% GDP growth was recorded last year. But the fruits of such military Keynesianism would not last long. Just to keep inflation in check, the central bank had to increase interest rates to 16%, further squeezing the private sector. An economy thriving on military spending is bound to have a weak foundation, as no war means no progress. Also, it would have a negative impact on social spending, development programs, and infrastructure maintenance. As Polish Foreign Minister Radoslaw Sikorski recently said, if you put your economy on crisis or war footing, your GDP rises because you are producing more shells and tanks and all the things that are going to get destroyed, but you're also wasting the resources and the wealth of your country, and this has limits. Russia's wartime economy has put its future in grave danger, as this form of economic growth has greatly increased Moscow's dependence on oil revenues, China, and unproductive war spending. Russia's huge frozen assets in the West are also in danger, as many leaders and policymakers in the West have suggested to instead use them in rebuilding Ukraine. As David Cameron, the former British Premier, said, "We've frozen these assets. The question is, are we going to use them?" Using some of this money now is, if you like, an advance payment on Russian reparations for its illegal invasion of Ukraine. The G7 has also asked its central bankers to come up with a technical and legal analysis. In 2023, the UK government asked the Bank of England to look at options for using Russian sovereign assets to fund Ukraine's war effort. The Ukrainian president also told BBC, "We have $30 billion of frozen Russian assets. They destroyed Ukraine. If we have $30 billion of Russian assets, we have to use them directly to rebuild what has been destroyed by Russian missiles. Why does your society have to think of how to help? If the world has $30 billion, why not use it?" To sum up, the Russian economy is bound to blow up because it lacks a diversified economy, a vibrant entrepreneurial class, the rule of law, and a stable business environment that can support a fast economic turnaround. It is high time that the Putin-led Russian regime introspects and engages in meaningful dialogue about the economic challenges. But it is quite apparent that Putin is in no mood to do any such thing. Russia continues to publish misconstrued economic data and indicators to propagate a triumphant narrative among domestic audiences. The author of the fall of the great Russian economy would be Putin himself, as the wartime economy has put the Russian economy on the path of doom. But that's just one way to assess the current situation. Do you think economic turnaround is possible? Or, with Putin's re-election, is Russia guaranteed to meet its impending fate? What are the chances Putin's government could turn things around and avoid a crisis? Leave your opinions in the comments and stay tuned for more on the Russian economy.